Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 7th, 2021. The U.S. markets were closed yesterday in observance of the Labor Day holiday, so this is the first trading day of the week. And I'm going to start out. Here's what I'm going to cover. We'll do an update on the markets because we did get those. They were sell signals. I called them for what they were last week, late last week, and we'll update you on the broad markets. I did give some reiterated some levels, some price targets for those of you interested in shorting the indexes here, or looking, if you're bullish and looking to buy a pullback, then you can use these same support levels and targets as levels to go long. Likewise, or well, not likewise, we'll also cover crude oil, natural gas, lumber, gold, the US dollar, and the euro. Of course, I like to wrap those in with my coverage of gold, and then I want to do an update on Bitcoin as well. So really just keeping in the theme of trying to keep it focused on a handful of trade ideas that I've been highlighting recently, and the ones that I think have the best risk reward opportunity and the clearest charts as well. Again, the indexes, we're going to start here. Remember, the story of the index has been grind, 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 and on the long or short side, there haven't been many swing trading opportunities lately. The pullbacks have been relatively minor. The trend pretty resilient, but again, inching its way up. You get a lot more bang for your buck trading commodities right now. And in certain cases, individual stocks have started to share some more trade ideas there lately, but still seeing most of the opportunities right now in the commodities. All right, so with the S&P 500, as I mentioned today, we have minor support right here. Let me give you crosshairs and tell you where that level is. It's roughly ballpark about 451 right there. You can see. And that's this recent shelf of support right here, and so we need to crack that on a 60-minute basis. These are 60-minute candles. You can see a little interperiod dip, 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 but not a solid break below yet. So that'll be our next sell signal. Remember, we had the whipsaw here. That didn't count because we didn't have QQQ break below trend last week. So this was our breakdown here in SPY. And again, it's been anything but impulsive. So call it for what you want. I'm going to call it a soft sell signal, not a hard sell signal, and but a sell signal nonetheless. And what we need to see is a solid break, make this big red candle down there, whether it's one or a candle that closes down here, that'll confirm that. And there's your targets right there. Adjusted that one. Support's around 445.90, so we'll call that 446 as a first target. Second target around 441.85. If you want to round up, you can call it 442. And then down here about 436, I'm favoring the bottom of this support zone. That's that important support zone in purple. All right, that's that. And again, whether you want to trade the indexes or focus on some other things, I'll get to those in a minute. QQQ also broke below the trend line right there, 60-minute wedge. And again, just kind of moving sideways since. I don't have the same minor support. I can't really draw a good support level there. So I think what'll do the trick is SPY taking out that support. And then I just listed two targets. Let's keep it simple. And these are, again, near-term targets should these sell signals play out for a decent pullback, and that would be about a 3.2% drop, and then down to that second target about a 5.5% drop. So again, initial near-term pullback targets certainly have the potential to morph into something more, but we'll just have to assess the charts if and as they develop here to the downside, and if they don't, then so it wouldn't be the first breakdown that didn't follow through in recent months. But all right, let's move on. All right, crude oil. Again, to me, much more bang for your buck and better. One of my preferred trades right now, let's say. That one, same story. We've been stair-stepping lower since this original breakdown back here with many trading ops, long and short. Or a trend trader can just hold on, and again, I believe this is I think that marked a major top, and so there we're at. Last week, as I mentioned, we hit that 70.19 resistance. It was a pretty big resistance level, in my opinion, and we got rejected there. Crude got rejected there twice, and in doing so, it also put in a divergent high here on the 60-minute chart, just like we had one here, one here, one here, and each of those were proved to be the catalyst, or the beginning, I should say, of the next leg down in this what I believe to be a larger downtrend. So we'll see. Only time will tell if I'm correct. But again, you it's objective to have be short here, add to a short. I like to short resistance. We're a little bit off that now, but still I'd like to see us stay below that level, but not the end of the world because we still have a major resistance up here. So if markets can power up and crude powers up, maybe it wants to run and make a second test of that long-term resistance. Again, you're not going to see it here on the 60-minute chart. I showed you that on the daily chart recently. And again, just to reiterate, I favor this, even though I'm showing you, potential scenarios. I think we continue to move lower, and what'll probably spark the next wave of selling would be a break below that 67 support right there, and of course, to see a break below that previous reaction low there. All right. Oh, let me just cover that. I sometimes forget we've got the ETF and ETN traders that don't trade futures. Nope, wrong chart. Let's do this one here. There we go. SCO is the trade that we're in. This is considered both a swing and or long-term trade. In other words, what I mean by that, well, swing traders can micromanage these tags of these targets. We already hit the first target there with a pullback, or was we got in back here. Gosh, I'm trying to remember, guys. I've had this one out here for a while, and in doing so, after the pullback off the first target, we put in just simply extended the divergence. So this one you can see we're still, remember you have decay and that's why you're close to those previous lows there, but still very much liking this for a longer term trend or swing trade. And so whether you took profits there and recycled back in here, didn't take it, doesn't matter. From this point on, I prefer a move up here to the second target zone. And if that is hit, you're talking about a 40 to almost 50% run. If that third target is hit, you're talking about a 73% return. All right, next up, on a somewhat related note, we'll look at natural gas. This one recently also hit long-term resistance, just like crude. And again, you're not seeing that here because we're on a 60-minute chart to try to zero in and hone down an entry on it. And so you had that minor trend line last week. Well, that's broken. So there's that sell signal. Before we had an objective short at resistance, long-term resistance on that gas. Now we have also an objective short entry on the break of the this 60-minute rising wedge, this minor trend line right here. With the divergent high. Last time we had a divergent high was right there. That was also a short trade. We hit my target, which was this uptrend line. I'm making a mess here on this chart. And that uptrend line is still in play. I'm going to make it a little bit thicker to make it stand out a little bit. And so that is a potential pullback target. We may, and I think this trend line will probably go sooner or later. And if so, you could have a much bigger drop in natural gas. But again, minimum target, you can see the support there, 42.17, 41.34, and then the trend line. Those would be your near-term targets down here for a short on natural gas futures. And UNG is the one-time long ETN for natural gas, and then one of the members recently pointed out KOLD, I believe, is two-time inverse. So if you want to use an ETN, you can buy KOLD and go short natural gas with 200% leverage. Next up, let's look at lumber. Beautiful tag today of the, let's see, that's the old contract, September. We've rolled now. I rolled my futures last week. These are the ones you should be in now. The November contracts. September's are about to stop trading soon. And look at that. That was the chart laid out last week. I had 692.31. Remember, I dragged these lines. These don't trade in the 1 cent increments. But this one had round that off. In other words, that's about we'll call it 692. We hit a high today. I'm looking at another chart on another program, and the high was 695. So almost a perfect tag of that target right there. And then look, nice pullback. This candle is not accurate. I'm looking again at the other chart. We pulled back after hitting that target to about 612 and change, almost 613. So we didn't fall there. That's kind of an erroneous print. Sometimes you get that on these charting platforms. I'm showing a low there around, again, around 613 or so today, so somewhere in there. But again, just another great example of how this one does trade well to the technicals. There was your resistance. There was your little breakout there, your divergent low. And so far, this has been, we've had a few false starts, but although they were tradable rallies, most certainly, that was a first target hit back here a while back. But I just want to say that so far lumber is up about, off that divergent low, about 44% right there. You can see 45% maybe. So a nice run just in the last few days. Some decent volume coming into it as well, I've noticed. So you can see these big green candles. Yeah, the sellers stepped in and sold hard there, and that's why you have these multiple targets. If you want to actively trade, you could have exited there, buy back in. Again, we're not at 551.93 right now. We're at 636. You can see right about there, and I still think we'll work our way up here at least to that 747 target right there. Probably get another reaction, and depending on what the market does, quite possibly up here to that 906. So there's still plenty of meat left on the bone. Probably another almost 20% upside to the next target. And should we head all the way up there to that 906, be another 42% in addition to what this one's already done. So still looking good. Just got a little ahead of itself and ran right into pretty solid resistance today. So pulled back where it should have. And here's gold, playing out to the technicals very well, or responding to the technicals. My big level remains right here, 830s, 1837.60, give or take, right there. That was that former T2 that was hit back here, hit it again here, hit it again here, and just hit it again recently. So it is resistance. It's big resistance. I still think it'll probably get taken out sooner than later. But as mentioned, as I often say, resistance is resistance until unless taken out. And then I pointed out last week that we did have some negative divergences and a trend line that, if taken out, would most likely trigger some more downside, and that's what happened. So a tight stop could have been placed there. You would have sidestepped most of this loss. Where do we go? Well, I gave you. There's a lot of support levels. We're right now at that 1795-ish level, and then we have really big support down here around 1777. So as long as we stay down there, this correction I'm still viewing as a pullback within an uptrend that started here off these recent lows right there. We're working our way up, and right now, if you well, I'm not going to turn off all the lines here. I'll just show you at this point in time. This has the makings of an uptrend. We're zigzagging higher. We're putting in higher lows and higher highs. And again, I'd like to see the 1777 hold. If we pull back to it, I will tell you that would be an objective long entry with a stop somewhat above. I'm sorry, somewhat below. And if you shorted this trend line break, or you shorted the rally into resistance, as I said last week, maybe you're a gold bear right now, then that would be a potential target for you as well to cover. Or you just trail your stops down and let it ride if you think gold's going a lot lower. But this was a reflexive bounce. It wasn't just gold hitting that very solid resistance right there. At the very same time, you had the euro also run into that same level I've had here for a while, 119.13 right there, big resistance. This is previous reaction high. There were reactions here, and that's it. So the euro's had a nice run off the bottom, off that divergent low. I don't know why this line disappeared, but there it is. There's your positive divergence, rally right up to resistance. Same thing. This is a pullback. There's a little uptrend line right there. If we can hold that uptrend line, power up on through here, and we break out, that's what you want to see for gold. You want to see the euro break above this 119.13 level, even if we pull back anytime a little bit more first. So that's what you want to see, and if so, that would be quite bullish for gold, and most likely coincide or proceed a breakout in gold above that big resistance level I'm talking about that we just got rejected off of. One more. Let's look at the US dollar. As I say, any analysis in gold is not complete without looking at the dollar, in my opinion. And I just need to queue up that chart. Bear with me. I've got it down here somewhere. There it is, DX. All right, here's what happened with DX. We put in a big divergent high back there, and we've been stair-stepping lower, little wedge break, trend line break, or support level break, break of the 92.804. So this is what you want to see, and we did see for gold. However, this was big support. Look at that support zone right there. That is the biggest support zone on this entire chart. You have multiple reactions back here, reactions here, another reaction there, and boom, we kissed it there. So here's what happened today, or over the weekend. At the very exact moment that gold ran into that big resistance level that I highlighted earlier, the euro hit the only resistance level I even had on the chart at the same time, pulled back while gold, or I'm sorry, the US dollar fell to key support. So if you think these are not related, then you and I will just have to agree to disagree. But that's what happened. So that's it. There's a big levels to watch. Reflects a bounce, just like gold had the negative divergence, the dollar had the positive divergence. But again, I think this bounce will be relatively minor based on my longer term analysis of the dollar and gold, and there's some pretty big resistance right there at about 92.809. So that would be if the dollar gets up there and you want to trade the dollar directly, short dollar futures, a short there at 92.80 if we get there, 92.81ish, with a stop somewhat below, somewhat above it. There's also some reaction highs right there. Maybe put your stop there for the next swing down, or whether you want to trade the dollar or not, that's also, you can use that analysis for gold. In other words, if gold happens to hit support at the same time the dollar rallies into that resistance level, all the better to add to or initiate a new long position in gold. And then last but not least, quick update on Bitcoin. This is Bitcoin futures, BRR, symbol for Bitcoin futures. You have the divergent high back there, and then you had a healthy correction. You put in effectively a divergent low right there. You can see that, and you had this rally, and we've come full circle. We started diverging back here at this point right there with the indicators making lower highs, as you can see, and prices making higher highs. And so this divergent high, the divergences finally started to play out, and they played out for an impulsive drop today so far. And that's it. Looks like, to me, that impulsive nature of that drop looks like the start of the next leg down rather than just a pullback. And again, that's based on not just these divergences, but the Bitcoin chart. I'm going to get to that. That's still a short trade idea. It has been for a while on the site. And that's via GBTC, the Bitcoin Trust, Grayscale Bitcoin Trust. GBTC. This one, over the years, I've had numerous long and short trade ideas on Bitcoin. Most recent was a short here at a rally into 39.25 with a stop somewhat above. Ideally, there's your next resistance. That's where you can place a stop. And several times they've tried to pop it. It was resistance here for a week. They couldn't clear it. Ran up, had a little momentum heading into there, popped it one day, failed it the next day, went back down, test. A little half-ass pop above it last week, Thursday and Friday, followed by a rejection, another smackdown today. So Bitcoin keeps getting smacked down here at that 39.25 level. Every time it tries to get above it, the sellers step in, and so that's still, in my book, pretty even. Actually, let's say a lot more significant resistance now than it was back here when it was laid out as a short trade idea. Why? Because back then, well, it was support, resistance back there, but we've had numerous reactions that tell me this is a key battleground between bulls and bears. And so based on the technicals, not just gut feel, but based on the charts, things I just showed you on Bitcoin futures, as well as this negative divergence here on the daily chart, tells me that the bears are likely to win this battle. So this one's still, it's still an objective short here. It's at 38.64. That's about where I laid it out back here. So we already hit the first target. That was our first pullback target. And we bounced as expected. That's why there's multiple targets. At the first target, and we had a reaction, a bounce. And so that should open the door here to this next short target here, about 33.64, 65 if you want to cover a little bit above it. And then T3, 31.74. We'll just leave those for now. If it starts to play out and we take out this 31.71, which was the first target that was hit back here, that should open the door for a move down to these two, and then I may extend some targets. And even if I don't, you can see the same levels that were on the chart from before on these previous trades, 28.16 and then 24.13. And if things get really ugly down here, it's still a possibility this one will see $17. That means it'll be chopped more than in half right now. It's at 38.70, so that would be an over 50% drop right there. Okay, let's wrap it up here. That's at least some of the things I'm watching today, and I'll continue to scan the charts. If anything else stands out, I'll get another post out to you guys today. This has been Randy Finney with Right Side of the Chart. Have a good one.